Welcome. In this video, I'm backtesting a reversal strategy, counter trend, divergence style, and I'm going to do 100 backtests, then compare it with yesterday's video results, where in that video I tested trend following divergence. So we're going to see the difference between trying to counter trend trade using bearish and bullish divergence versus going with the trend, trying to buy or sell pullbacks with the trend direction in mind. This time we'll see how well does reversal trading work with divergence. Now, I do want to point out a clear difference in the environment of the market and how that's going to affect how our divergence works. So counter trend divergence, bearish divergence in an uptrend, we can see all of these signals, which I have marked with red arrows. It's obvious just by looking at an uptrend that it's terrible. It does not give us a good idea of when the trend is going to get a large reversal. Typically, it just leads into somewhat of a sideways consolidation or pullback, but then trend continuation to the upside. Or if it was a downtrend and we had bullish divergence, normally we see small pullback, pause, and then continuation down. So divergence does not give us a high probability of capturing a large move in the opposite direction of the main trend. And so it's terrible to go counter trend with regular divergence, as is very clear. We can look at many trends, but what I want to do for this test is give it the best possible chance of working. So I'm going to show you guys the set of price data that I chose to backtest this 100 times on. I'll just get rid of this real quick so you can see. This was a complete ranging period with Bitcoin. So it starts where I tested over here, leading all the way to over here. That was the 100 back tests. You can see that it's all ranging action instead of the strong trending action, because I just want to see if even in a range, can counter trend divergence potentially make any money. I already know the answer because I've already done the testing, but what I can say is that you don't want to counter trend trade using divergence. As I always have said, going with the trend is the way to go, and you're going to have a very difficult time counter trend trading using divergence. So let's quickly give a shout out to my affiliate partner, because they set you guys up with an event, limited time until February 7th. Just for signing up, you get a $10 USDT bonus plus extra trading volume bonuses on top of what they already offer you with the welcome bonuses that everyone gets. So if you use my affiliate link, you can get these bonuses on top of the ones they already offer. This exchange is crypto exclusively, but it's great for most of you guys who can't access most exchanges due to your geolocation. So these guys are no KYC, no VPN needed. So anyone can access this crypto exchange, Bitunix. Been working with them for a while. They've been great. And so check them out if you need a crypto exchange and you're having a difficult time accessing most exchanges. They will allow you in and welcome you. Now, let's talk about the strategy here. We'll just get into what I'm actually testing. So yesterday's video, you guys saw that I tested trend following bullish and bearish divergence. So in that situation, we have the 200 EMA and we're only taking long signals given by bullish divergence. If price is over the 200 EMA, we're only taking the short signals if price is under the 200 EMA, as can be seen like this one right here. And this one. So we were going with the trend as determined by the 200 EMA. So if we were doing that here, we would have longed there, we would have longed here, would have longed here, and over here, as well as over here. So those would have been the long signals for yesterday's test, trend following divergence. But this time, each of these purple short signals with bearish divergence would actually be a short instead. So we would not be taking these longs. If price is over the 200 EMA and an uptrend, we would be looking to short. When we have a bearish divergence, stop loss is going to be placed according to the same rule as yesterday's test, which was this ATR stop loss indicator using 1.5 times the ATR. This is that indicator, the ATR stop loss finder by Verified. And then we are using Divergence of Many Indicators, V4, by Lonesome the Wolf for the divergence signals. Okay. These have default settings on both. And then just a standard 200 EMA for trend direction. And of course, we're doing counter trend trading in this test. So let's just show a basic setup with the stop loss will be profit target, break even stop loss method. And it's essentially the same as yesterday, just in reverse. So we get a signal such as this one here to go short. Stop loss goes to stop loss indicator, 1.5 ATR above that candle. And then we're going to be targeting a reversal, which would be the failure to hold another higher low. So this was our previous higher low. We broke out to a higher high right here before getting this signal. And then we're going to be targeting 1.5 ATR below that particular previous low that gave us our last higher low. So this would be the target down here, this particular spot on the ATR indicator. So that would be the setup right there. And for stop loss to break even, would be going break even one of two ways. So either price reaches this low right here, so just the price low that created our last higher low, because we're looking for a reversal, which means we don't want to see a higher low anymore. We're targeting below that, but we'll go break even if price reaches that previous low, the lowest point before we went into our higher high that gave us our signal, right? So that would be break even stop loss level number one. But the other method is if we get a 1-to-2 risk to reward ratio before reaching that, then we'll also go break even stop loss there. So this particular trade, it's going to get drawn out over here, but eventually we get stopped out. Price never goes 1-to-2 risk to reward ratio in our favor, and it ends up being a loss. Here's another one. So we get another short signal, counter trend. We're over the 200 EMA. Stop loss goes to the stop loss indicator. We're going to look back a little bit. So we had higher low, higher high, higher low, and then went into this one here. So we're going to be targeting a reversal down to here. So this is going to be the low that we're targeting, 1.5 ATR below it, lowest point. And this one also does get stopped out right here very quickly. And we get another short signal here. I think you can already see that these all get stopped out. But we do in fact get some winners with good risk to reward ratios eventually. So when the time comes for a trend reversal, we typically will get in on that trend reversal because we get so many of these divergence signals. Eventually it's going to work out. So not this one here, but it looks like this one, we actually do capture a nice reversal. So that would look like this. And then we're looking to, let's see, here, new highs. Okay, so we're going to be targeting this down here. This was led us to higher high right here on this closed candle. We're looking for a close above the highs here. And then we go into this divergent signal. So we're looking for that reversal there, which gives us about a 1-to-3 risk to reward ratio, and it does end up hitting it. Looks like we would go break even right here. Actually, this one ends up being stopped out at break even, but you get the point. Looks like we would then get another short signal, which does in fact hit a profit target right here. So then we're going to go to 1.5 ATR before the lows of that particular move. So that one does end up hitting the profit target. And then we'd be longing down here. So we're under the 200 EMA, trying to go reversal style here. So we're going to long this. Looks like we do get stopped out, but we get another long signal. So that one gets stopped out. Here's the long signal here. Looks like this one's going to work out. So we make a new lower low. Then the high right here, can look to our target. So you can see we go lower high, lower low, lower high, lower low. We're going to just be expecting that we're not going to hold a lower low anymore because we're trying to get a reversal. So 1.5 ATR above that level, previous lower high right here, gives us a 1 to 1.85 risk to reward ratio, and it does work out. So it does hit the profit target. So potential for this to do well in a ranging environment, but we already can say that it works very poorly in a strong trend, as I think most people know already, but a lot of new traders might not be aware of that fact, that we can see plenty of bearish divergence counter trend before there's actually any significant reversal. So let's get through the 100 back tests, and I'll show you guys the results, compare it to the results that we saw from the trend following version. All right, so here's the results, and I have the comparison on the right to the result with the trend following method. First, counter trend results, giving it the best possible chance by putting it in a range. I did not give the trend following method the same treatment. Now, Bitcoin, US dollar, same thing as yesterday's test. 1 hour time frame, variable risk to reward ratio, break even method. Took 7 months for the 100 trades. Winners 29, losses 60, break even 11. Most wins in a row was 2, most losses in a row was 8. The average win was 2.5 R, so 1 to 2.5 risk to reward ratio essentially. Losses obviously -1 R. Break even just not applicable. So the gain on the account, risking 1% per trade, not compounding, 13.13%, which essentially means this was break even after fees, maybe slightly profitable after fees, but barely made any money, if any at all. Now, let's compare that to the results with the trend. So same thing was tested, exact same divergence indicator, the only difference being that we were going with the trend instead of counter trend. Winners were 36, losses only 45, break even 19. So a lot more break even, which means we had a higher chance of getting a move in our favor when we go with the trend, enough to go break even at 1 to 2 risk to reward ratio or at new highs, giving us a trend continuation. So we have a higher chance of getting a follow through move that gives us at least 1 to 2 risk to reward ratio than we do having a loss. And the most wins in a row was 4. Most losses in a row was 5 in that case. The average win was a little bit smaller, but that can just be the sample of price data that was used, 2.384 R. Gain on the account ended up being 40.83%, which is actually a pretty good figure based on all of the strategies I have tested on my channel so far, over 100 now. And so I think it's pretty clear that even if we do range trading, ranging environment with counter trend divergence, we still have a hard time making any profit doing that method. But if we go with the trend, it's a whole lot easier to make money and ride the wave instead of trying to predict when it's going to come to an end. So that is kind of just the proof in what I've always been saying about divergence, where we don't want to go counter trend. It's going to give us maybe a little pullback, maybe some sideways, but most of the time that's all it's going to be. Most of the time the trend will continue. So you're pretty much better off if you see a regular divergence that's counter trend. You're probably better off just waiting for a pullback to buy and expect a continuation of that trend, seeing as it happens more times than not. And this lines up really well with my testing that I've done on trend continuations. How often do trends continue? Which in my various tests that I've done on my channel, testing how often trends continue, got around 60 to 70% of the time. Trends continued. So that lines up perfectly with our 60 losses and 11 break evens that we got here from the counter trend divergent results. So 60 to 70% of the time, we see that trends do continue. Here, we are seeing out of the winners and break evens combined that we get around, let's see, 55% of the time, we get at least a trend continuation or 1 to 2 risk to reward ratio. So 55% up to 70% of the time, somewhere in that range, we see trends do continue. So going with the trend kind of puts us at an advantage right away. And you can see that by the gain on the account figure as well. I'm sure if I had chosen a stronger trending environment to do this test on with the trend, I could have gotten a better gain on the account figure, better win rate, and so on. I knew this would perform horribly, so I tried putting it in a range to give it the best chance possible of producing a profit, which I successfully did, but it was very difficult to get any profit on this counter trend method. And obviously this is not a strategy I'm saying to start trading with, this trend following one. I'm just proving that counter trend trading is much worse than trading with the main trend, as I think a lot of people already know. But I know a lot of newer traders, myself, when I first started trading, my first 6 months into trading, I thought that counter trend divergence was a viable thing to try and pick tops. And so just better off not trying to pick tops, trying to go with the wave, and you're probably going to be a lot better off. So hopefully it's helpful for some newer traders out there, this information, or even those who might still be trying to counter trend trade. And I'm sure there are methods. You can probably scalp little pullbacks using counter trend divergence. I'm sure there's people who make money doing it. I'm just saying that for most people, it's probably better that you go with the trend. At least that's what's worked well for me. So that's what I preach. All right, that's it for this video. Thank you guys for watching.